What's going on, you guys? Welcome to the video. Today we're going to be taking a look at 3 stocks to buy going into the month of December. And I'm proud to say that this video is sponsored by Masterworks. Masterworks lets you invest in the world's most valuable paintings. They are the first high-end art investment platform out there. What they do is they go out and they purchase multi-million-dollar works of art, and they allow the public to buy, sell, and trade shares in them. As stated on their website, blue chip fine art has outperformed the S&P by 250% since the year 2000 with a low degree of volatility. An example of this is their Colored Maryland from the Reversal series by Andy Warhol. This piece has appreciated at an average of 11.25% since 1999. These paintings were selling at an average price of $121,000 in year 2000. Those are now selling for over $1.8 million. So let's say you would have invested $5K in a Warhol back then. Well, today that'd be worth around $37,500, whereas the same investment in the S&P would have delivered half of that. You can head over to their website and read all about how their platform works. This service is available to any investors out there in or outside of the US. You can purchase shares at $20 a share with a minimum investment of $500. Investing in fine art has always been reserved for the ultra wealthy until now. So be sure to go check out Masterworks. That'll be that first link down in the description below. But the first stock that we'll be talking about in today's video is the company Tesla, ticker TSLA. And this channel has been going for just under a year now. We're coming up on 1 year. Thank you to everyone that's been supporting, the journey so far. But I don't think we've talked about Tesla on this channel yet. And that's likely just because of its speculative nature. When I invest in a company like a Coke or a McDonald's, I can say with almost confidence that 10, 15 years from now, I will have made some money on that investment without really a huge amount of risk of these companies, going out of business or me losing a big chunk of that investment. With a company like Tesla, I don't quite have that same level of confidence, which is of course what makes it a speculative stock. But I actually used to own Tesla stock. I owned them a couple years ago. I ended up selling out in late 2017, and I've been happily sitting on the sidelines through the course of 2018, which we all know has been a crazy year for the company, with Elon Musk facing the drama with the SEC. Throughout the year, there have been delays for the highly anticipated Model 3, all kinds of stuff going on. But why do I think that this is a good stock to buy? And I don't think that I really need to get into the whole electric vehicle or autonomous driving space. At least if you ask me, this is the direction that we are heading. And with Tesla being kind of like the pioneers or the front runners in this space, it goes without saying that there's extreme potential here. The question has always been with Tesla is how can this company perform from a business standpoint? Because until now, for the most part, things have been quite negative. From missing targets, production delays, as we know with the Model 3, when you're building up a company like Tesla, clearly that requires a lot of funding and taking on extreme amounts of debt when you're building up these gigafactories and trying to produce all these cars. However, their most recent report, which we'll take a look at now, actually looked kind of good. In the third quarter of 2018, Tesla did not lose money. They actually made money, which isn't so common for Tesla, or what it hasn't been so common for Tesla. They posted net income of $312 million. They posted free cash flow of $888 million. Earnings per share came in at $2.90 versus what Wall Street was expecting. They were expecting a loss of 19 cents. The Model 3s were out, and in the third quarter, they were the best-selling car in the US in terms of revenue, the 5th highest in terms of volume. So clearly, not a bad quarter out of Tesla, and this is right in line with the statements that Musk made about Tesla being able to turn positive profits going forward. And as we can see here, taking a look at the share price, the market has definitely reflected that. Since the earnings report, or basically over the past month, the stock is up about 40%. Now, just because I'm including Tesla stock in our 3 stocks to buy video for the month, that doesn't mean that I'm looking to buy this stock at this exact moment after this 40% run up. In fact, knowing me, that's probably one of the last things that I'd want to do. But I did want to include this stock in the video as one to watch over the coming month. Because as we can see from the chart here, Tesla has kind of been trading within this band. And if we were to see this stock kind of drop back down down over the next month or over the next little while, well, I think that this is a reasonable level to consider an entry point into Tesla because I am starting to see some great long-term potential for the company. If you were to have asked me like a year or two ago whether I thought Tesla was going to be around and doing well 10 years from now, back then, like I probably would have told you, I don't know, like it would have been like a 50-50. But as time has gone on, I'm starting to kind of lean towards Tesla being here for the long haul. Clearly, Elon Musk is one of the most innovative people out there. He has, such a strong vision for this company. And if they are able to pull it off, like this could be a stock that rewards investors very, very nicely. At the end of the day, Tesla did have a nice quarter, but I don't think that we should be, crazily overreacting to this. Overall, their financials, they still don't look extremely compelling. And that's what makes it this speculative investment for a certain type of investor. The stock currently trades for $347 per share. It does not pay a dividend. Like I said, I'm going to be patiently waiting for a drop, but Tesla is the first stock to buy in December. Moving on to the second stock for the video, it's the complete opposite of Tesla. It's the company General Mills, ticker GIS. And you guys already know my stance being, later in the cycle, kind of targeting some of these safer plays. Well, General Mills is a perfect example of that. This is the company that, of course, makes some of the world's most popular cereal brands. Take a look in your kitchen. You probably got a box of Cheerios in there. They also own brands like Betty Crocker, Haagen-Dazs, Pillsbury, Old El Paso, Yoplait. General Mills is just a staple company that's going to be found in any American's kitchen. Now, very much like a lot of the consumer staples out there, and for the most part, these high dividend yielding sectors, this company has been under pressure from rising interest rates, which of course make bonds more attractive. But General Mills has been on a downslide prior to that, dating back to about midway 2016. They're down just about 40%, and rightfully so. The company has been struggling with their growth. Organic growth numbers have not been the greatest, but where we stand today, kind of trading around this $40 to $45 range, I think that it's a little bit overkill and that this stock is currently undervalued. And I think that now is kind of a good time to start looking at a position. I'll first mention here that General Mills pays a 4.44% dividend with a payout ratio of 54%. In fact, they've actually paid out their dividend for 119 consecutive years. So an extremely nice option for any dividend investors out there. But one thing that I want to mention was their acquisition of Blue Buffalo in April of earlier this year. And I think that it's a very, very smart move to see these consumer staples companies getting into the pet food space. We've seen Nestle as a great example of this with their brand Purina. And I can read an article here from the Motley Fool saying that the company hopes that this acquisition will grow sales and profits by double digits, with Blue Buffalo pushing overall revenues higher by 9 to 10%. Maybe this is what the company needs to get it back on track. Morningstar currently has them rated as a 5-star buy with a price target of $58. And the stock trades at an extremely reasonable PE of 12.3, which is lower than the S&P 500 and the industry average. And I completely understand that consumer staple stocks are not the most exciting, especially a lot of younger investors, tend to avoid these types of companies. But when the next recession does hit, whenever that is, we still gotta eat. We still gotta eat our cereal, our breakfast, our yogurts. Our pets, they still have to eat, and they eat a lot. They don't care whether we're in a recession or our economy's doing well. That doesn't matter to them. They still have to eat. So I think that the addition of Blue Buffalo just completely complements, like the core companies or core brands that this company owns. And I do think that this is gonna be a really nice acquisition for them. One thing that we can take a look at here is over the past year, we've seen an uptick in their net income going from 1.6 billion up to 2.1. Free cash flow as well has been improving, nearly identical, 1.6 billion in 2017 up to 2.2 billion. And as we can see from their share price, maybe the market's starting to reflect that. You know, we're starting to see some stabilization here, potentially a bit of a bottom forming. And if earnings were to come out positive in the next quarter, I can definitely see this stock start trending up because it's been beaten down so hard and it is so out of favor right now. The stock currently trades at $44 USD. It pays a 4.44% dividend, like I said, and General Mills is the second stock to buy in December. Moving on to the third and final stock for this video, it is the company Apple, ticker AAPL. And I already do own shares of Apple. I plan to own shares of Apple for a very long time. It's arguably my favorite company out there. And very much like Tesla, I'm including this stock in the video, not necessarily saying that I'm going to be going out and buying at these exact prices, because we may see some further drops in the company Apple, but it's one that we will absolutely want to watch over the next month, because if these drops continue, that to me is only a bigger and bigger discount for one of the world's strongest companies. As I'm sure you're well aware, Apple shares are down 19% off of its October highs, and the question that we can ask ourselves is, why are they down this much? First of all, we've been seeing significant drops in FANG stocks in general. Amazon as well is down 20%. Facebook's been on a crazy downslide, down nearly 40%. Netflix, Google, these stocks are all down. The NASDAQ, which is comprised of the big tech stocks, well, this has dropped double digits since September. It's not just Apple. But one thing that seems to be troubling investors in Apple in particular, and has likely been a factor in this drop, is the fact that Apple announced that they would be no longer disclosing the number of iPhones or iPads that they sell, right? Their unit sales. And the takeaway from this, at least kind of how I think investors are interpreting this, is, well, hey, they're not disclosing these numbers because they're no longer going to be growing at the rate that they used to be. What are my thoughts on that? If that's the case, if that's the reason the company has decided to withhold that information, that's okay. That happens, you know, especially with the company as large as Apple, as massive as Apple, you know, the largest company in the world. At some point, a company has to hit, you know, a peak or a plateau in terms of their growth. But that doesn't mean that the company's going downhill. In my opinion, I look at it in the sense that, you know, maybe Apple's saying, you know, hey, you know, we're not going to be showing you, or we're not going to be disclosing our iPhone sales because where we stand as a company today, you know, maybe that's a metric that doesn't concern them so much. You know, I get it that it's the largest component of their revenues, but they already have like an installed base of, I believe it's like 1.3 or 1.4 billion devices out there. This company is much bigger than just phone sales. And in my opinion, they're actually only getting stronger when you think about like the services that they're offering, or their services segment with, you know, Apple Pay, iCloud, Apple Music. To me, this is the future of this company. And in their most recent quarter, they reported $10 billion in revenue, which is an all-time high in their service segment. And this is a number that as time goes on will only continue to grow. So does this concern me that the company's withholding this information? Absolutely not. And whenever news like this does break, you're gonna get a ton of investors that say, oh, you know, it's downhill from here, you know, Apple's done. Yeah, right. In the third quarter, we did see Buffett or Berkshire Hathaway add to their Apple position. They added just over 500,000 shares. This is still their largest holding, and you can never complain when Buffett's out there buying, you know, stocks that you're looking at. This is a stock that trades at a PE of 15, while the S&P trades at 19. It's unbelievable for me to think that the largest company in the world trades at a PE of 15. Like, it's still a cheap stock. And I was actually just in an Apple store last week with my mom. She was attending one of those in-class or in-house you know, lessons or sessions that they offer for free called Today at Apple. That was, I guess, the day or the hashtag that they were going with. I mean, it just reminded me, like, this company truly understands what it means to build a community. And I have no doubt in my mind that this company is going to be fine for the long haul. At the end of the day, the question that I ask myself here when I see a drop like this is that, I mean, Apple was the first company to hit $1 trillion market cap, as we all know. And currently it's sitting at 830 $839 billion. The question I ask myself is like 10 years from now, is this company gonna be back above $1 trillion market cap? Absolutely. I mean, Apple, Amazon, Microsoft, I think all of these companies 10 years from now will be well above that. So, you could make the argument that, now is not the exact best time to buy Apple. Shares could keep dropping down, which they could. But I mean, you could make that argument about any stock that's going down. But with a quality company like Apple, the further and further this company drops, I really only do look at that as a bigger and bigger discount on one of the most successful companies in the world. The stock currently trades for $176 USD. They pay a 1.65% dividend, which is above average for its space. They're sitting on a boatload of cash. I'd be more than happy chipping away at Apple the further and further it drops, but Apple is the third and final stock to buy in December. So guys, those are my 3 stock picks for the video. Like I said, with Apple and Tesla, I am going to be kind of watching them over the next little while, whereas General Mills is at a point where I think it's offering a nice entry point. What do you guys think of my stock picks for the month? Do you agree? Do you disagree? I know that for all 3 of these companies, there's arguments to be made for both sides. So I'd be happy to hear what you guys think. Leave a comment down below. And if you're interested in keeping up to date with the stocks that we buy, taking a look at my personal portfolio, be sure to join our membership group. And if you did enjoy the video, feel free to give it a thumbs up. That really does help support the channel. And if you're not already subscribed, I post a video every Monday, so subscribe and hit the bell. But as always, I thank you guys for watching, and I'll see you in the next video.